Hey everyone, Coach Investor back with another video for you today. So in today's video, we're going to talk a bit about a company that everybody knows, everybody might be using it on a daily basis or on a monthly basis. It's not one of these high growth, high reward stock that might 10x in a couple of years. It's about Amazon. Yes, Amazon, this huge $1.6 trillion company. I know a lot of people do not have the likes of Amazon or Apple or Microsoft in their portfolio because, well, it's those boomer stocks, let's say. It's not those 10x or 5x in the next couple of years, and that's a huge shame. So in my next couple of videos, I'm going to talk about those types of stocks, the Apple, the Microsoft, the Facebook, because I still believe those companies will continue to outperform whatever analysts have said during the last quarters and the last earnings report. Those companies become each year bigger and bigger, and right now there are some reports saying that Amazon might be buying MGM. No, not MGM, the casino chain. I also thought when I read the headline, MGM, incredible move, but no, it's MGM, the media company. The one that made Rocky, Creed, and James Bond, that part of MGM. So we're going to look into that in this video. I'm also going to share my thoughts on why Amazon could still become even bigger, because Amazon really exposes you to so much more than just Amazon, the e-commerce website. So we're going to look at that. But before I do so, I just want to thank everyone that has been subscribing lately, on the way to 16,000 subscribers. So if you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, maybe leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. But before we jump into the Amazon MGM thing, I just want to show you how crazy this is. Amazon is now at a price it was way back in July. But since July, the company had 4 quarters already. Each and every quarter, the company has outperformed and has made more and more money that someone can imagine. But still, the stock has created this large base here between $2,900 and $3,500. It's been like this for months and months right now. The stock is just waiting to pounce and waiting to go to that $4,000 mark. So if you don't have Amazon in your portfolio, yes, I know we were all waiting for a stock split that never really happened. I don't know why, but Amazon, yes, it's expensive, but at least you're going to own a super, super good business that makes a ton of money. And to continue on that point, just look at this. Earnings per share of $15.79 versus $9.54 that was expected by the street, so a huge beat on that. Then revenues of $108.52 billion versus $104.47 billion was expected. That means that sales were soaring 44% year over year. I don't think a lot of us were expecting such huge numbers, such a huge beat. But Amazon, even today, is still outgrowing so many other companies out there. It's really incredible to see. And that's one of my big messages I want you to understand from this video. Bigger can become bigger. Just like Chicken says in a couple of his videos, higher can go higher. Well, with these companies, higher can also go higher and bigger can become bigger. The likes of Amazon, Apple will not suddenly stop growing and stop making money. No, they will acquire other companies, they will make other products that will make them millions and billions of dollars in the years to come. They're not going anywhere anytime soon. Now let's jump into the Amazon and MGM thing. So here on the Financial Times, Amazon in talks to buy MGM for $9 billion. The exact number here is not confirmed yet. And actually, the whole article isn't confirmed by both parties. So right now, these are just rumors. So like I said, MGM has an expansive library of movies and shows, including Fargo, The Handmaid's Tale, and The Hobbit, and obviously the Bond franchises. Now, to understand if this is going to be a good thing for Amazon, a good deal, so MGM reported net income of $29 million on $403 million in revenue in the first quarter. Now, if a company like Amazon, who has Amazon Prime, the streaming service, etc., starts buying these types of companies and releasing those movies exclusively on Amazon Prime, it might make sense actually. Just to show you how much Amazon is spending and focusing on this creating industry. So last year, Amazon spent $11 billion on creating, acquiring, or licensing music and video content for Prime subscribers, up from $7.8 billion in 2019. The company has also been busy acquiring rights for live sports, including a deal with the NFL worth about $1 billion per year to broadcast Thursday Night Football. This is something I talked about also in my last video regarding the trade desk. Live sports is one of the biggest industries in the streaming world, in the TV world, and this is something that is up for grabs for the likes of Amazon, Netflix, and the others. Now, if you ask me, does this deal make sense? Yes, this deal makes sense. It makes sense. It's another piece of the huge puzzle that Amazon is. Twitch, also something that Amazon owns. The gaming industry is booming and becoming bigger and bigger each and every year. So Amazon is gaining from that as well. Twitch, the biggest streaming platform out there. This deal might happen, might not happen, but if it does, makes complete sense. And again, the live sports thing is another huge move. I don't know why Netflix is sleeping on live sports, but it's something that they might miss out on for the future. Disney has it, Amazon has it, I think Peacock has it as well, I'm not so sure, but probably they do. Live sports is another billion-dollar industry market that really, if you're a streaming giant, you need to have live sports on your platform, because that's one of the only reasons why linear TV is still standing as of today. Now, last two things regarding Amazon and maybe autonomous driving. I know a lot of Tesla fans are here, myself included, but Amazon has been investing heavily into autonomous driving. With Rivian, they invested more than $1 billion in Rivian. They've ordered, I think, more than 100,000 vans from Rivian, so they're making that move as well. They've also bought Zoox a couple of years ago. If you don't know what Zoox is, it's this electric, fully driverless vehicle that's built for ride-hailing. That's obviously not yet on the market right now, but you can see where Amazon wants to go. The ride-hailing, ride-sharing market, autonomous market is going to be huge. If obviously everybody solves full self-driving, huge market, lots of money to be made, and that's a market Amazon obviously wants that as well. Healthcare is another market Amazon is jumping into. So if you think Amazon is right now slowing down or is not going to grow much more, you cannot be more wrong. So that will be it for this video. So to conclude, yes, I'm very bullish on Amazon. I'm very bullish on all of those big companies. I think those companies should be in someone's portfolio. So maybe you have them in an ETF or in your Roth IRA. I don't know. But these are the types of companies you want to have in your portfolio, because even in a market downturn like we've seen in the last couple of months, these are usually the stocks that fare well. Let's say they might be down a bit, but they won't be down 30 or 40%. So just let me know down in the comments below what you think about Amazon. Do you hold one of the big companies, the FANG companies? Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.